To talk briefly about something that that's kind of a follow-on of what's going on at the moment with Axia, and that's this concept of executing very aggressively over these risk events. Okay, obviously you've been seeing a lot of videos coming through of probably arguably Axia's best trader, really maximizing his understanding. More importantly, not just his understanding, but his edge. Okay, I think one of the key things that a lot of traders don't quite grasp is that the trader in mind has been executing this manner or this strategy for well over 10 years now. So he's maturing as a trader into something quite phenomenal. But I think, again, one of the key messages to take away there is that it doesn't come through watching a few videos. It doesn't come through logging on for a stream. It doesn't come from just being there one day and not being there the next day. It comes from year in, year out, day after day, hour after hour, frustration after frustration, coming back for more and ultimately building that understanding over a period of 10 years. So, this is kind of going to build upon that. It's going to kind of give you a structure of ultimately what that trader does when he prepares for these events. Okay, so we're talking about risk events, and risk event trading, and we're going to use this oil. Obviously we've got the OPEC meeting now on Friday, which is 2 days away, and we're going to use this session to prepare for that. I'm going to take you through a preparation, through a scenario analysis, through an understanding analysis. Hopefully you can apply it for OPEC and then practice. Okay. Not going to discuss a key auction reversal, but we are going to discuss, throw in this concept of a consolidation breakout within the oil, so you get a good understanding of the structure of the market. Okay, so like I said, the theme of this stream is very much, risk event trading, and like I said, it's important we do go through this for two reasons. One, there's some fantastic videos there for you to watch of, arguably, Axia's best trader, really, doing something very special, so it's important that I can give you guys a template to work on that you can, if that's your style, that you can build upon and begin to develop that sort of style of trading. Okay, so the first thing that you need to be aware of when it comes to risk event trading is preparation. Okay, now by preparation I don't mean reading a couple of newspaper articles or being aware of what has been said, what hasn't been said. Okay, a lot of it's got to do with what the market is sensitive to, what the technical landscape of the market looks like, where the big risk reward plays are, and then ultimately what are the correlated markets. And I'm going to take you through each one of these with the oil OPEC meeting in mind, so you can get a really good understanding of effectively how this plays out. So the first thing that can be said, obviously this is being recorded now on Tuesday the 4th. Most of the Axia traders, if not all of the Axia traders, will already be aware of the numbers. Okay, why? Well, because very often what happens going into a risk event is that the market has priced the risk event well before it's actually announced. Okay, in other words, the deals are struck a long time before the official announcement, right? Whether it's an election, whether it's a Brexit vote, whether it's the OPEC meeting, these deals are done and dusted well before the actual announcement. Okay, so you have to be prepared well in advance. Okay, not 24 hours before. We're talking 4 or 5 days before. Now, that level of preparation can include a number of things. And I'm going to use the example again of the oil. Okay, if you don't know the basic, big players in terms of oil, i.e. the Saudi Arabias, the Irans, the relationship between Saudi Arabia, Russia, the conflict now between Saudi Arabia and Trump with regards to higher oil, low prices, etc. If you don't understand all of these various dynamics, okay, you're not well enough prepared. And the reason is because as we head into this meeting, these big players, all right, they're going to be saying things, they're going to be releasing, sort of pieces of information to the market that ultimately force participants to reprice. Okay, let's take an example. So say now, for example, right now it came out that, the Russians were not happy with the cut that Saudi Arabia was speaking about. Okay, you have to be aware in terms of a scenario analysis, how far can a market potentially go on that? Okay, is the market sensitive to that or not? Is it new news? Is it old news? All right, so you have to take each little bit of information and weight it. Right, if it came out right now, all of a sudden that Saudi Arabia were considering 1.5 million barrel cut per day, right? that would be a substantially big opportunity in the market, simply because the market, is concerned that they might not even get 1 million barrel day, cut. So 1.5 is substantially higher. Therefore, prices need to reprice. Call it $2, $3, $4. Okay, so that's the first thing, is that level of preparation and understanding. What is priced. Okay, we talk about market pricing. What's effectively priced? Well, right now, in terms of OPEC, right, there is some disbelief. Okay, if there was a belief of a cut of, the ballpark figure is 1.3. Okay, if there was this belief, you would find oil prices being a lot higher than what they are currently. Okay, so that's a good thing as a trader, because if the market doesn't necessarily believe this, it means that there is still an opportunity for prices to go up if they do reach this agreement, and if they don't, oil prices to drop very quickly back down to the recent lows around that $49.5 a barrel. Okay, so that's the first thing, is that sort of market pricing. Now, that ties in very much with expectations. In other words, what is expected? Okay, well, it's expected. Over the weekend, we had, Russia and Saudi Arabia agree. So there's an expectation in the price, which is that Saudi Arabia and Russia have agreed to some form of a cut. All right, so that's expected. So if they came out right now and said Saudi Arabia and Russia, are in agreement about a cut, okay, that's not market moving. Why? Because it's already in the expectation. Okay. Again, like I said, there's talk of 1.3 million being the number required, obviously, to get rid of this excess inventory. All right. Is that expected? Well, no, it's not currently expected. Okay. We know it's not currently expected because we've obviously seen a number of members say we don't know what that number is going to be. We don't know who's willing to sign up to it, or if people are willing to sign up to it. Okay, so whilst this is the number being thrown around, if it did come out, it would be substantially positive for the market, even though it is a ballpark figure number. Right? And that's what expectations are all about. It's about understanding the numbers, understanding what is expected, what is priced, and what can move the price ultimately. All right. Then the two key ones, and these are the ones I personally like, and this is where your better traders, for example, this Axia Trader, this is where he's always thinking, okay, predominantly over here, but this is something I quite like. I always like the concept of risk reward plays. Why? Because, well, so do a lot of other people. All right. If you feel that right now, given the price of oil and the history of the OPEC cartel, and how this big slump in oil prices is going to cause so much issues and concerns, there is very much a good risk reward play to be long oil. Why? Because, well, if they do come out and agree at 1.3, and they do effectively put a floor in the oil market where they're willing to stop oil prices dropping further by limiting the supply, well, then all of a sudden you've got a very, very good risk reward play. Okay, now these risk reward plays, there's a number of ways to execute them. We could do it in options, futures, or a number of different manners. Okay, but the important thing is to understand, where is the risk reward play. Okay, now, because of the nature of the pricing and the expectation of the OPEC meeting, there's actually a risk reward play on both sides. Okay, in other words, you could argue that there's not going to be an agreement because of Trump, etc., and that right now, if they don't agree, we're going to drop from the current price of, say, 53.5 down to recent lows of 49.5. Okay, so you could very easily argue that there is a $4 reward there. Okay, how much are you going to risk to take on that play? Equally, on the flip side, you could argue that it's too expensive for OPEC to not come to some form of an agreement, as we had in 2016, where they had the mishap, and we saw oil prices collapse quite aggressively when they couldn't get to an agreement. Right, so some could argue that, well, given the recent sell-off, $53 is a relative discount, and they are likely to reach this 1.3 million, and if they do, prices could move back up towards the $60 a barrel. In which case, again, there's sufficient risk-reward metrics in place. Okay, so it's all about understanding where are those risk-reward plays. And I'm going to show you this a little bit more in an example in a minute, so just keep with me. The last one is the correlated markets. Okay, and this is where your good traders, well, we shouldn't even call them good. This is where traders differentiate from being great traders and being elite. Okay, and that's the truth, is that really good traders they know where those correlated markets are. They're aware of those correlated markets. They hit the front market, or the market that's most sensitive, but then they also hit the correlated markets. Right, so they almost double their winner. And they're very aggressive in both aspects. And again, that's what's very much admirable about that that trader at Axia that's really become so special is that he's doing all of this in almost automatic fashion, where he's just going through the preparation, the pricing, the expectations. He knows the risk reward plays, he knows those correlated markets, and he's absolutely maximizing on them. But again, guys, it takes 10 years. All right, let's go through an example now. Let's discuss OPEC meeting on the 6th of the 12th. And I'm going to start off by just taking you through number one. Like I said, part of the preparation is understanding the technical landscape.